Hi everyone. I am Advocate Kritika from ILMS Academy. Today we will discuss what benefits do gig workers actually get with new labor laws. Let's begin. For the first time in India, gig and platform workers were given a legal identity under the Social Security Code 2020. But legal recognition is only the first step. The bigger question is, what does that recognition actually translate into? What can a Swiggy delivery rider, an Ola driver, or a freelance designer on Upwork actually receive under this law? That is exactly what we are covering in part 2. We will walk through each category of benefit: life and disability insurance, health and maternity coverage, old age pension, skill development support, and then explain the funding model that makes all of it possible. Because this is where the law gets practical. This is where it moves from being words on paper to something that can genuinely change the lives of millions of working Indians. Life and disability insurance is the most urgent benefit for gig workers. And here is why. Delivery riders and cab drivers face road accidents every single day. They work long hours, in all weather, under constant algorithmic pressure to complete more trips faster. When something goes wrong, and it does, most of them have nothing. No insurance payout, no sick leave, no compensation for their families. The Social Security Code enables governments to design schemes that cover death arising in the course of work, total and partial disability, and hospitalization costs. The proposed range for death compensation is between 4 and 10 lakh rupees, depending on the final scheme design. One of the most practical aspects of this for platform workers is that digital proof already exists. Every ride and delivery has a time-stamped log. If an accident happens during an active job, the platform data establishes work-relatedness instantly, which simplifies claims enormously. Funding comes from a combination of aggregator contributions, central government grants, and state top-ups, with an optional tier for workers who want enhanced coverage. Health coverage is the second major pillar. Gig workers, especially those doing physical outdoor work, face real health risks every day: pollution, long hours, irregular food, stress. But because they have no employer, they fall outside the employee's state insurance scheme entirely. The code changes this by empowering governments to extend health schemes to gig and platform workers, either through existing infrastructure like ESIC or through new platform-specific arrangements. Coverage can include outpatient care, hospitalization, diagnostics, and preventive checkups. The smart way to implement this is by linking gig workers into Ayushman Bharat, which already has the infrastructure and hospital network in place, rather than building something new from scratch. Telemedicine is another practical option. A rider can consult a doctor through an app while sitting between deliveries. For women gig workers, the code is especially significant. Maternity protection, financial support during pregnancy, antenatal and postnatal care can now be extended to home-based and part-time gig workers who have never had access to these benefits before. This is the benefit most gig workers never think about. And that is exactly the problem. Today's 25-year-old delivery rider is not thinking about retirement, but in 30 years. When their body cannot keep up with the physical demands of gig work, what do they have? Without pension contributions, the answer is nothing. The Social Security Code enables old age protection through two existing national schemes. PM-SYM Yogi Man Dhan allows workers to contribute as little as 55 rupees per month, with the government matching that amount, resulting in 3,000 rupees per month at retirement. Atal Pension Yojana offers guaranteed pension amounts from 1,000 to 5,000 rupees per month, with automatic deductions linked to a bank account, which works well for gig workers whose income comes through UPI. The more innovative model is the micro-contribution approach, where platforms deduct a small amount per delivery or per ride and route it into a pension pool. This removes the burden of the worker having to make a conscious decision each month and build savings automatically over time. Here is where the Social Security Code goes beyond just being a safety net and starts functioning as a genuine empowerment tool. Skill development provisions recognize that the best form of protection is not just paying out when things go wrong. It is building the capability of workers so they can earn more, move up, and become less vulnerable in the first place. For workers themselves, the code enables funded access to certified training, defensive driving, digital skills, financial literacy, customer service. These are not theoretical benefits. A gig worker who completes a certified coding or customer service course can move from a 15,000 rupees a month delivery job to a 30,000 rupees a month support role. For families, the code envisions educational scholarships for workers' children, breaking the cycle where the child of a delivery rider also becomes a delivery rider because there was no money for education. The delivery mechanism matters as much as the content. Training embedded into the platform app itself, with completion linked to additional benefits, is the most effective design because it removes every barrier between the worker and the opportunity. Now let us look at the mechanism that makes all of this possible, because benefits without funding are just promises. Section 114 of the Social Security Code is the key provision. It mandates that every aggregator, every company that uses a digital platform to connect gig workers with customers, must contribute between 1 and 2% of their annual turnover into the National Social Security Fund. The cap is set at 5% of total payments made to gig workers, which ensures the obligation is proportionate. This is not a tax on workers. It is a levy on the platforms that profit from their labor. Swiggy, Ola, Zomato, Urban Company, Dunzo, all of them are covered. The central government adds matching grants, and states can add further top-ups for their local worker populations. The fund is then governed by national and state social security boards, and the money flows out as benefits. Insurance, health coverage, pension, skill development, and emergency assistance. The model is deliberately designed so that the platforms which benefit most from the gig economy are the ones carrying the largest share of the cost. Benefits only matter if workers can actually access them. So how does a gig worker go from being unregistered and invisible to being covered under the Social Security Code? The process has 5 steps. First, register on the e-Shram portal using your Aadhaar number and mobile phone. This takes under 5 minutes and can also be done through the platform app itself. Second, you receive a unique Social Security identification number, your single access key to every scheme in the system. Third, your platform shares verified work data with the government, confirming that you are an active gig worker. Fourth, once schemes are officially notified, benefits are transferred directly to your Aadhaar-linked bank account. There is no agent, no form filling at an office, no middle layer. Fifth, and this is critical, your ID and your benefits are fully portable. A Swiggy rider who moves from Mumbai to Pune or switches to a Zomato contract retains everything. This portability is essential because the gig economy is inherently mobile. Workers move, platforms change. The benefits cannot be locked to any single employer or location. The Social Security Code 2020 is not a perfect law, and we will get into its limitations in Part 3. But what this video has shown is that the benefit architecture is genuinely comprehensive. Life and disability insurance for workers facing physical risk every day. Health and maternity coverage for a workforce that has never had employer-sponsored insurance. Pension schemes that can work even with irregular incomes. Skill development pathways that help workers grow rather than just survive. And a funding model where platforms contribute proportionately from their own revenues. The critical next question is whether this architecture can actually be implemented, or whether it remains a framework in law but a gap in practice. That is exactly what we cover in Part 3. Thank you for watching. If this video was useful, please like and share it. The link to our certificate course in labor laws is in the description below. It covers all 4 labor codes in depth and is designed for HR professionals, law students, lawyers, and compliance officers.